Morning, Large Void. Morning, Bruce. All right. Let's get after it. Just get my morning, everyone. It's Monday, May 11th, 2026. New day, fresh start, fresh week. Welcome to Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with a focus on building real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with one goal: to build out the structure before the open so that we're operating in alignment with the day's dominant forces. So we're not guessing, we're not chasing, we're kind of taking trades that follow a logic chain. All right, so let's get after it. Let's map it out. We're going to start off what we do every Monday morning. We're just going to take a quick glance at our higher time frame, our weekly chart, see how the last week formed, and see if there's anything we can discern about it. And one thing quickly here's on your left-hand chart, you're looking at a weekly chart of the ES futures. On the right is a 15-minute. The first thing that stands out to me immediately is just that this has just been an extremely strong trend, right? We've been just one time framing higher. I'm going to go ahead and remove this. Wait, let me leave that on there for later. Yeah, so we've just been one time framing higher, guys. Even and on a weekly, that's not easy to accomplish. That's indicative of a really strong trend. So what one time framing means is simply, it's a market profile term that was coined by Jim Dalton. And what that means is just literally that the prior low of the bar that printed has not been breached or taken out or tested. So each low is a higher low. Okay, and that's simply what we have here. Very strong trend, parabolic move straight up. I mean, it doesn't get much more straight than that, right? All right, so let's go glance quickly at the daily, and then we'll dig into the 4-hour charts, kind of get in alignment with what we want to do, how we want to approach this day. Yeah, same thing here, right? We kind of had this. We've had a couple of days where it's been more of a pullback in time than any type of weakness or lower prices. Bears just an absence of sellers. I've been highlighting that each week, each day. Sellers just seem like they're not present. We went sideways here after the April 17th high, went sideways, broke out, pulled back onto the upside. We had 2 days here of some lower price action, consolidated, and then moved higher. All right, let's dig into the 4-hour. Again, same thing here, right? One time framing higher, and I think that immediately what stands out to me is this low here at 73.36. In order for there to be any type of shift or an alert to any type of trend change, I think we need to have this prior low on our radar, which is 73.90, as well as this prior low, which is 73.36. Now, 73.36 is, over just about 100 points away from here. So let's just be mindful of that. Let's keep these lows in our mind. That would signal, I would venture to say that taking out this low here and taking out the low at 73.90 would not really get my attention. Okay, I wouldn't think that the trend is in jeopardy there. For any type of structural shift, I think we need to take out or at least test 73.36. But you can see that price is really using these moving averages, trailing them nicely, moving higher. So with that being said, our hourly trend is firmly intact, firmly up to the upside. With this straight up parabolic move, it doesn't make for much technical analysis. I'll tell you that much. And I love technical analysis. All right, let's dive right into the 15-minute chart. This is where the rubber meets the road and where we frame out our narrative for the day. All right, so the first thing that we're going to highlight here is just that, as I said earlier, not to beat the dead horse, but here we kind of had like a bear flag, right? This was on last Thursday, And what bears couldn't gain any traction to the downside, and it was just on to the upside again. We gapped down at the 6 p.m. open, and all of them got liquidated overnight. We're kind of seeing the same thing here, and that we gapped down last night. We tested the Friday low and breached it by a tick or two, actually by 1.25 points, by 5 ticks. And then it trapped, and it's been on to the upside ever since. All right, so we're going to do what we do every morning. We're going to isolate what is the state of the overnight inventory. And to kind of identify what the state of the overnight inventory is we look at where the settlement price is. Okay, so the settlement price was 74. Is that 40? Hang on, they kind of stacked there. Let me just get in there. Yeah, 74.19. All right, and immediately what stands out to me is that the settlement was at 74.19, just as well as yesterday's Friday's volume point of control. Volume point of control is the price that had the highest amount of volume on Friday, and that was 74.19.50. The settlement is 74.19, which makes things really easy for us going into today. When you have all of these levels kind of stacked together, it gives us a better opportunity to gauge what the intention of the day is going to be. All right, so with that being said, all of our price has been contained below the prior day's settlement, right? But since moving down, we see that while price gapped down, it has moved higher, okay, and just recently moved lower. So I'm going to say that the overnight inventory is more neutral than anything else, because we kind of had some lower price action, and then that led to a buy, and price drifted higher. Now it reached the settlement, it reached the volume point of control, made a high at 74.20.75, and since then it liquidated, broke all the way down to 74.02. So there's not really much to discern from the overnight inventory. All right, so let's map out, like we do every day, the most bullish argument, the most bearish argument. We're going to talk about a few trap trades, and then we'll cover the dreaded sideways move. All right, so say we're opening at 74.12, and we get an open drive. Now what an open drive is when the market opens and it's one directional, maybe a few ticks in the opposite direction, but really it's just everybody's on the same page, whether that's buying or selling, and the market just moves right through the local levels and just continues to move higher in one direction. That's what we call an open drive. So say we come into this open, we're opening at 74.12, and that's the look that we get. And if we blast off and we get higher immediately, because our daytime frame references are stacked between 74.19 and really 74, let's call it 74.19 to 74.25, right? 6-point band. Okay. And if we get a move above that with strength and momentum, that gives us an excellent zone from which to use a risk marker, right? So if we break out above the overnight high, satisfy the 96% stat, and then price pulls back, holds the top of this range here of the overnight range at 74.19, we can start looking for entries on pullbacks to get long and target yesterday's high at 74.27. Of course, taking our scales along the way, and then see what the rally gives us, see how far price is willing to take it, and trail up our stop aggressively. All right. Yeah, I like that setup, but here's the thing. All right, let's cover the bullish trap trade. Okay, hang tight. Let me just get a screenshot of that. All right. All right, so that covers the most bullish argument. Let's talk about a bullish trap trade, right? We all know how much ES loves to trap. So say we're opening 74.12 and we get a rally, an open drive, or even just a rally higher that comes up and breaches the settlement, right? So remember that when price breaches the settlement, there's always it's always a shift, right? Because because people who are just watching price on their phone or not looking at a price chart, that means that the market went from red to green, and that's a good psychological indication of what the day might bring. And so going from red to green, it could potentially lead to further buying. Well, let's see. Say we rally, we get above 74.19, 74.20, and then price stalls. Let's say we even go as high as yesterday's high, 74.27. At that point, if we're long from our pullback to based on the most bullish argument, if we're long from the settlement, we'll have our stops at break even, and we'll be managing the trade accordingly. However, say price rallies from 74.12, tests above the overnight high, looks above, and then all of a sudden comes back into the overnight range or falls back below 74.20. At that point, we have to be on alert for a failed auction. What that means is that early buyers off the open were able to drive price higher, look above the settlement and the overnight high, but were unable to gain a following. All right. At that point, if we re-enter the overnight range, we can start looking for short scalp ideas that get us with the move that will get us back keep us back within the day's range. Okay. Using this local high as our risk marker. Okay. So if we rally, say, and it's a really tight band, 74.20 to 74.23. 74.19 to 74.24, let's call it. I think that will give us an excellent scalp trade, a scalp idea to get us back into the overnight range, and we'll take our scales accordingly. So here's the other thing, right? So we're going to monitor the opening print as we do every day. So a big tell will be if we look above the overnight high, we trade back below it, and then also breach the opening print. Okay, at that point we'll know, hey, there's probably going to be a liquidation break, and we can entertain short ideas to get us back into the range, taking our scalps along the way. All right, so that kind of covers the bullish trap trade. Let's talk about the bearish argument, and then I want to just go over, another nuance that I came up with that I was looking at earlier before I got started. All right, so that covers the bullish trap trade. Let's go over the bearish argument. All right, so we're opening at 74.13, and immediately we get a liquidation break. So the one thing we're going to have to focus on there immediately are these local lows at 73.91 to 73.90, right? Remember that's our pullback low from our hourly trend. Okay, so that's going to be our first reference. But if we open and the opening print doesn't fail to gain any buyers, immediately, if we can get below this balance low here, or say we get below the 74.05 to 74.10 band, right? At that point, we'll kind of discern where we are in relation to the opening print, or the price that printed right at the open. And at that point, we can start looking for short scalp ideas that get us down back to test yesterday's low. Okay, so say we open up, we immediately get below this band, and then on any retracement, price is unable to get back through the open, and that starts acting as resistance. That point, we can start looking at a rejection from the prior day's value, and we could be looking for a liquidation break or entries for short scalps that get us down maybe for a test of overnight low or yesterday's low at 73.90 to 73.92. Okay, so that covers the most bearish argument. Let's take a look at the bearish trap trade and see which are my favorites. Nothing against you bears, but I just do well on those trades. All right. So we're opening up at 74.12, and we get that same look, right, where price just opens, gets back through the open, gets through the 74.10 to 74.05 band. That's right here, right, with strength and momentum. We all know when ES sells, it's a hot knife through butter, right? We get the pullback, we get our short entry, and we test down to yesterday's low. At that point is when our alert has to go, our ears have to go up, right? We have to start really paying attention to what happens below the overnight low and yesterday's low. And guys, the easiest tell on ES is when it's selling hard. It's cut. It's a hot knife through butter. We should not pause there whatsoever. Maybe a momentary blip, but nothing serious. And then price immediately cuts through. When ES is selling, it really cuts through supports like they weren't even there. And it doesn't cut through one support. It's going to cut through several of them. And so we'll be able to tell if that is happening very easily. So say we do get below overnight low or yesterday's low at 73.90 to 73.92 and price stalls out. Immediately what we're going to start doing is we're going to start looking for a reclaim of yesterday's low or a reclaim of 73.92. And then we want to see if there's a higher low formed. Okay, if there's a higher low form, at that point we're back into prior days range, and we can start looking for any long entry that gets us in above this local high for a scalp or for a long trade that would get us up to the settlement for a gap fill. All right, so let's be mindful of that. We can get down, maybe go as low as 73.85, 73.80, and then immediately retrace, or price stalls out and starts retracing. At that point is when it's most dangerous to sell, because we don't want to get trapped, and we all know how much ES loves to trap. So let's be on alert there. Let's let the tape confirm by printing a few bars there that show whether or not price is being accepted or rejected from those lows. And if we start printing closes above yesterday's low with wicks below, then we know that buyers are trying to defend it, and that the most likely move is that yesterday's low will be reclaimed and that we will be trading higher. All right. So the one thing that stood out to me over the weekend I was thinking about was the divergence that we were talking about on the stream between the Russell and the NASDAQ and the ES. And the reason why I wanted to talk about that was because typically when the market's at all-time highs, when it's this high, right, we need to be on alert for sector rotation, because we know that can signal a shift in the market. Okay, and with the Russell and with the three majors being divergent for the last 2 days on both Thursday and Friday, I think we have to be up. It behooves us to be mindful of it, because at any point here we could see a shift. Now, we need a structural shift, right? We can't just guess or assume that something's happening when it's not there. So for us, that would materialize below yesterday's low, 73.90. But even further, I know that Thursday's low at 70. Let's see, make sure I get Thursday's low right. So Thursday's low is at 73.45. Okay, that's where things kind of start to change, and the structure of the move starts to look different. And at that point, we can start entertaining either a shift in the overall trend, and perhaps we're looking at a deeper pullback of this move higher, or if bears get trapped down here and it's game on to the upside. But let's be mindful of that. So we mapped out the most bullish argument, the most bearish argument. We covered the bullish trap trade and the bearish trap trade. Now let's cover the dreaded sideways move. So dreaded sideways move, right? I hate it. Hope it doesn't happen, but we have to cover it. All right. So say we get a move higher that doesn't test the settlement, and immediately what we can use for that is the overnight high 74.20, the overnight low at 73.90. Okay. So if price is unable to test either one of those levels or either one of those prices, and is just knocking back and forth inside of the range, inside of the overnight range, then at that point we have to start thinking about changing our approach to less directional trades and more of a mean reversion approach, where we're scalping the edges or we're trading from the middle out to catch a move to test one of those range highs. Okay. So if we're knocking around inside the overnight range, 74.20 to 73.90, we're going to be a wait and see mode, right? We're going to have to see, let's let the market signal what it wants to do next and see what its next move is. Again, if we're going to trade that, we want to trade it from the inside. If you're going to trade it from the inside out, targeting either the overnight high or the overnight low, then that's great. But remember, keep your stops tight, keep your scales even tighter, because the market is probably just going to be chopping back and forth. And I have a feeling that that's not going to happen today. We had a somewhat of a muted overnight range at 30 points, probably expecting some range expansion into the open, but we're going to have the opening bell here in a second, and we'll make sure we jot down the opening print, and then we'll get started for the day. All right, there it is, guys. Here we go. Let's see what the opening print is. All right, the opening print is 74.10. Hey, Tom.
Morning. Sorry, I got a little late.
Nope, no worries.
I didn't recognize you without the hat.
Oh, yeah, that's right. Hang on, hang tight.
There we go.
All right, there we go. Everything's right with the world. So how was your weekend, Tom?
Very good. Very good. Non-eventful, the way I like them.
Non-eventful weekend.
How about you? Any games this weekend?
Nope, no games this weekend. We had a game on Friday. My daughter's team lost in regionals. I'm kind of, so the seasons are coming to an end, which I'm kind of happy about. It's always a good wind down time. So we just kind of, we went to the beach on Sunday, but mostly we didn't do much. What is this going on here? What is going on over here?
Wide open. I thought there'd been a little bit more with the Iranian proposal rejected.
So I didn't hear about that. I was kind of in a news vacuum, but you said that the Iranian news, there was an Iranian news?
Yeah.
Okay, good to know.
Yeah, the Iranians turned it down. They said, no, we're, they'll do a partial opening if U.S. doesn't blockade their ports. That's their stance on it. So
got it. Heads up, guys. So we opened 74.10. We opened and we blasted off. This is looking a lot like an open drive. So stay alert here. Again, we know where decisions will be made, right? We kind of mapped that out before the open. Let's see where we are. We're testing now the overnight high. Okay. So let's see. Let's be on alert here. Caution here is important because we know how much the ES loves to trap. Okay. So what we're going to be doing is looking for a delta shift. But first, let's take a look at the internals. Oh, first thing that jumps out at me is the VIX is gapping up 6%. It's up to 1826. Crude oil is chopping around, trading 96.91, and our internals 1-to-1 negative. Oh, sorry, 1-to-1 positive on the NYSE, 1-to-1 positive on the Nasdaq. Okay, so wow, what an awesome move here! What an awesome move! It's just ripping. Yeah. So last night I had I'm still in a long trade from last night. Worked out really well. I bought that gap. I bought the retest of the gap down. Like I bought right in here.
Oh, nice.
Let me see. Yep, I bought right in here. So I got my scales out, and I almost got taken out on this wick. But yeah, I have my stop at 7,400. I just let it rock, let it roll.
Yeah, I would have thought there would have been, like I said, a little bit more action. I think that's still going to run the tape, right? What's going on between Iran and a port of and the Straits of Hormuz. That's as soon as they open that up. I read somewhere that it's causing 20% disruption in oil, in the supply of oil, which is the largest in the modern era.
Yeah, I mean, isn't it 1/5 of the world's oil goes through the strait?
Something like that. Yeah.
Something similar to that. Yeah, there's Rev. He's our resident crude expert.
More Rev.
Yeah. So what a wicked drop, as my New England folks like to say. In oil, just I believe just a few days ago it was at 110, and now it's down to 97. So that's pretty big move there. $14 oil, moving oil. You've got to think though that that there are some type of powers that be that are trying to keep oil prices in check. I don't know. That's my tinfoil hat assessment. Yeah. Reverie points out that he bullseye. He thinks the same thing. All right, guys, we're making a move above the overnight high here. Stay alert. All right, getting that opening drive look. If you guys are in this long, stay alert. Take your scales out. Be cautious here. Be cautious. Feels trappy to me. I don't know.
It's actually going to be somewhat quiet. We've got Tuesday. Tomorrow we got CPI tomorrow. So keep that in the back of your mind.
Oh, yeah. That's
that may
right.
be a push.
Thanks. Yep. Good point.
That may have some impact.
Yep. I'm looking for be careful, guys. This is feeling trappy to me up here. If the pullback to the settlement and the areas we outlined in the open are to hold, then then we should see I want to get another 15-minute print above here to give me some acceptance. Show me some acceptance. That's what I'm looking for here. Willing to kind of like sit out this first move on the day. We've been so parabolic to the upside, right? It's just been straight up to the upside. Let me make sure this thing is off. Okay, yep, that's disabled. I have the algos off. I don't want to. Oh,
Semis hitting new highs again. What a surprise!
Well, I kind of fudged on that. This thing got me short or long. Okie dokie, not what I wanted. I'm going to go ahead and let that play out.
Oh, it goes okay.
Short leash on this one. Yeah, I went ahead and closed that out. I'm going to let's shift back over here. Keep an eye on this.
Rev put out a really about crude. That the Asian refineries have stopped buying physical, thinking this is going to be resolved. That would be nice.
Just got to monitor this position here. Okay, so Reverie points out one part of it is that the volatility has caused big money to stop buying futures contracts and instead buy options. Stand by for gamma. Stand by for a gamma squeeze. And the other is that the Asian refineries have stopped buying physical at the highs, thinking it would get resolved. They're going to have to panic buy if it doesn't. That will make the outstanding options exposure interesting.
Not that it makes sense. I'm looking at the Mag 7. Only one of them are up today, NVIDIA. Everything else is down.
Yeah, interesting. Interesting. The VIX is gapping up pretty big here. Let's see if this. Because I don't like the way we just stalled out right here before yesterday's high and just kind of now we're just chopping. Reverie points out if the price of crude starts rising, anyone who wrote options are going to have to hedge by buying futures contracts. Yep.
Not that it's anything new or not, discovering anything, but you take a look at. I don't look at it. The SPYs, they're very heavily traded. Look at how the volume has gone down during this rally. This white line that represents I think it's 5-period moving average, something fairly short. But look how that's just dropped on this whole rally.
Yep. Yeah, that is definitely.
That's just one of those other. And again, it's these conflicting. We're getting to the point where, the valuations are starting to get expensive, but nothing saying to stop buying.
Yeah, I'm just wondering when, at some point, you start to see chips taken off the table, and you start to see some profit takes. I'm just wondering when that happens. Eventually, it always does.
Oh, of course.
There are some underlying signs, but that's the upside to being a day trader. You can just focus on the day and the day time frame. You kind of don't have. You really don't have to consider the higher time frame stuff. So yeah.
You guys sleep better, that's for sure.
For sure. Hang on a second. I'm just watching this delta here. Let's see if we can take out that 74.2475. There it go. Oh, nope, not yet. Okay. There it goes. All right, we got above it. Good job. All right, game on to the upside. Next target up here at yesterday's high, 74.2775. Let's see what happens up there, guys. Let's go. This is just a monster candle, 74.10 to 74.25. And it's definitely going to close above the overnight high, and let's see if it can extend a little bit higher. And it's broad based because look at this. Now the Russell is participating. I think that if you look at like the rise in semiconductors and you look at some of the moves that we've seen there, I think that if you're going to see any type of sector rotation or any type of weakness, I think it materializes there first.
Yeah. Go ahead. I'm sorry.
No, go ahead. I was going to ask you, what are your thoughts on the semis and the move that we've seen there?
Well, the semis it's just crazy. This is stuff that this is like surpassing 1999 with the dot-coms. But you were talking about the Russell. I pointed out last week in one of my afternoon updates, on Wednesday, there was a high volume area.
Oh, I think we lost Tom. Hang tight, guys. Yep, getting that move now up to 74.2775, yesterday's high. Everything's on board here, though, too. Like, everything is really dialed in here. So we got the Russell at highs, NASDAQ, too. So let's just see. If you're in this long, trail it up. But if you're right, stay right. There you go. Thought we lost you there, buddy.
I think there was an update on my computer somehow.
Okay. So I think you were talking about this your Wednesday update.
Yes. Hold on. I gotta start and stop my chart. There we go. Okay, on Wednesday, there was a high volume area that I was just watching. On Friday, on Thursday, prices kind of got there, couldn't break above it. So the market was saying that this was somewhat relevant. We're going into that right now. And it's, again, on the Russell 2876 area, 2884. So that's going to be kind of critical if to see how it acts there. Now, I don't know if it's going to, bleed over into the minis, but no, they're pushing to the highs now.
Oh yeah. Oh yeah.
It's a NASDAQ. They're at all-time highs. The Russell Gold.
Go, baby, go.
Let's go.
Let's go. Let's go. Let's go.
Yeah. Crude selling off a tad or pulling back.
All right, we're looking above yesterday's high here. Yesterday's high, 74.2775. I'm going to go ahead and trail this up here. No need to let it come back on me. Give up 32 points. No. It comes back into range. I don't want any piece of it, but this is just really moving out here. Really moving out.
Yeah, we're sitting at kind of quiet. We got four sectors still down. So nothing major.
Yeah, good point. Let's take a look at the sector, at our core sector list.
It's tech is leading roughly.
Heads up, guys. The weighted AD is showing some weakness here, although it's coming in a little bit, and our sectors are seen mixed off the open. So let's wait for that to change here a little bit. But you can see right here on the chart share. Let me make sure that the folks watching at home can see this at home. On socials, let's just see. All right, so we can see here that the core sector list it's a little bit mixed. 1, 2, 3, 4, 5, 6 sectors green versus 1, 2, 3, 4, 5 red, and our weighted AD is showing some weakness here off the open. Mm-hmm. So be careful if you're not in a long trade. Yeah, just know the environment.
This is also the one of the things that I take a look at is the RSP is the symbol, the Invesco, the equally weighted ETF, and it kind of gives you a little bit more broad based versus the tech weighted XLK. So looking at this is basically sideways. We're up 9 cents, or it's just fractionally. So watch this. This is not confirming a big rally today, but these things could change. But again, the conflicting information, keep it in the back of your mind. Watch how this is going to do, and they don't work lockstep. But if this thing starts selling off, it may start having a drag on into the E-minis.
Yeah, and sometimes it's more about sometimes it takes it takes some time for this stuff to kind of materialize and work itself out.
Mm-hmm.
But that's why I'm pointing out the sector rotation we highlighted on last Thursday and Friday, because I think it's important to know that those are the signs when you've been around this for long enough. You know that there are no absolutes, but things tend to rhyme, right? And so often what you get is you start to get these signs. And so if never one thing changed and then market sold off, it doesn't work that way. But when you start to see the signs, right, when you start to see certain indicators and certain of your tools start pointing to being cautious, it's important to heed that. So,
all right, let's take a look. NVIDIA all-time highs.
Oh yeah,
looking at the semis.
The rocket ship.
AMD pulling off, but at all-time highs. Qualcomm, I believe that's all-time highs for Qualcomm.
Very strong move here, though. Yeah. Very, very strong move.
Micron. Oh, these. Look at. I mean, again, this is reminiscences of the .com era. Just all these parabolic moves. Except Broadcom.
Yeah.
Even Nvidia finally broke out. We're talking about them being, prices being rejected up there, above this distribution. But, my synopsis was if this and Apple break down, it'll pull it. But they both turned around and broke out.
Oh, heads up. I just realized that there's a big, hey, heads up, guys. I just realized that there's a big typo on the market blueprint today. Dang it. Oh, man. Hang on. Yep. Dang it. That was supposed to be 74.20 and I put in 74.02. Okay. All right.
So, Rev, according to the chart you just dropped, you thinking that's a bounce on that line?
Let's see what that does. Expiration also, so we may get an unwind, not a prediction, but a possibility. Yep, GDL 99. So good to watch late this week, early next week, plus new Fed chair. Yeah, this is a really, really busy week on the econ calendar, right? There's just a ton of stuff coming out this week.
Mm-hmm.
I was looking over
confirmation. We got Trump flying out to China, meeting with Xi.
Oh yeah.
When is it? Tuesday? When they say that?
Oh yeah.
The 14th and 15th. So Thursday, Friday. So
seeing some weakness in the NASDAQ, but the Russell is very strong. NASDAQ is back below its prior high of 386, trading 358. Probably just a pullback. Okay, right. Hang tight. I'm just trying to fix this this level on this market blueprint. So just give me a second here, guys.
Sure. Since I'm older, just watching these parabolic moves just makes it tougher. You wanting some sort of pullbacks for opportunities to get in, and it's just not giving it to you. Two down days in the last day in the E-minis. Yeah, the best way had a little sideways action. There's really not a lot of opportunities to jump in there.
No, not at all. I mean, this is the type of move, right? This open drive look. I still have the long on from overnight. I'm long 73.99 that I bought last night, right? But other than that, had this been open and this been moving higher, I'm sitting this out, and I'm going to get stopped out on this here shortly. But I do want to warn everyone that just there are some signs here that we are going to pull back. So in fact, I'm going to go ahead and take this off. I'm going to take the 32 points right there, call it a day on that trade. Nice
Nice
trade.
way to start the week. Nice way to start the day.
For sure. Yep. Thank you. That was a gap down buy last night, and I missed the initial entry of 7,400, but then we got a pullback at about 9 o'clock, 9:15. I had a buy in at 7,405. Sorry, 7,403, and then I bought 73.99 when it pulled even lower. It went to traded as low as 73.96.75, and I sat through that, and then it kind of just pulled up on me, so I was good to go there. I got 5, 10, 15, and then 30 on it. So pretty happy about that. That's a great way to start off the week, like you said.
Hey, nice ways. Boy, I'm smart. I got this figured out.
Yeah, right. For this 15 minutes.
I'm just looking, not that I trade it that often with silver. Silver's up almost 7% today.
Is it? Oh, look at gold too. Oh, well, gold's flat.
Yeah, no, it's I don't know, any silver bugs out there. I don't know, but that's one of the things that it's moving. And nat gas. Well, you know what? Actually, I haven't really looked at that often. Is copper. Copper kind of broke out. I mean, and obviously it has relevance other than just in copper. It's saying that, since it's such an industrial metal, that there is demand. If they're pushing this higher, hopefully, it's starts broadening out. NASDAQ just went positive.
Yeah. Be careful here, though, guys. Be careful. Caution. Remember, if we come back into let's watch here very closely. 74.27. That's yesterday's high. We want we want price to. I mean, that's the first line in the sand, right? So we want to see price hold that level, or at least slow down on the sell, not accelerate. If it does, then we're looking at overnight high down at 74.20. So it's pretty large. It's pretty wide. It's a pretty wide band. However, that's what we have to work with.
What was your level or your first?
74.27, which is yesterday's high. And then beneath that is 74.20, which is the overnight high. So those are the two levels that I'm monitoring here. I'd like to see price. If we do get below yesterday's high, 74.27, then I want to see price kind of stall out. And we get as low as 74.20, I want to see that level hold and consolidate a bit for maybe a long entry in the continuation of the trend.
You're right. I think if we get below, if the prices up here are rejected, if the auction is saying that those prices are rejected and they fall back under the level that you pointed out, the 74, what was it? The 74.27.75.
Yep.
No, that's a good call. That's a good number to look at. Watch how it reacts, and if it gets back to Friday's value.
Right. So if we get back into Friday's value, and it's awesome because today we kind of have all those levels like stacked. Mm-hmm. So value area high is 74.23. So we have that to give us some clues as to what the directional bias might be if we're going to get a continuation. I'm getting a first pullback alert here. Let's monitor this. Let's make sure we get the right account in here so everyone can see. All right. So the algo has me short on this one. So the algo has me short at 74.32. Looking for a first target of 74.27.50, and the stop is just above the high. I'm going to tighten that up a little bit. No need to risk that much. What are you guys seeing out there? Anything interesting? Let's see what Reverie posted. Oh man, look at that. Looks like a. Oh, I like that. That trend line it's testing right now. It looks like it broke below it, right? 96.71. Yep, it's gone below it. I'm still trying to keep this get this thing edited out here, guys. So just bear with me here a second. Yeah, and look, it's coming right back up again. I kind of try to let the algorithm do its thing, but sometimes it's hard when you disagree with it. But that's the thing, right? If you have an algorithm that's working, let it work. $74.32.50. Let's go.
So are you long?
Short.
Oh, okay.
Short. Yep. It has me short. 74.32.50. I'm trying not to look at it. Trying not to look at it. Trying to distract myself.
That's the hardest part.
Yeah. Yep. It feels like I was reading some stuff over the weekend about AI, bubble, that whole thing. It feels like the AI is becoming like the new internet bubble debate all over again. Except this time, I think these AI companies are actually making money, whereas like the .com bubble, not a lot of them did.
.coms didn't. That was crazy. So it's just teetering around your entry there.
Yep.
I don't do a lot of futures trading. Maybe 4 or 5 trades a week.
Okay.
Always
4 or 5 a day.
It seems like I put a trade on. It's like, okay, it's just going to dance over back and forth over my level.
Right.
Either that, I just look at those differently than my equity trades.
I feel the futures. The one thing that I kind of like always try to keep in mind is to not overtrade them, because by their nature they're going to push and pull a lot. It's very hard to get a position and stay in it because of the nature of them, right? Everybody's constantly using ES to hedge and Q to hedge, and so it gets tossed around quite a bit. So I always keep that in mind. Like, hey, be mindful of what this instrument is. That's why it's much easier to trend and to buy a trending. Like if you're trying to get into a trend move, I think it's easier to just be, some long dated options, or maybe, get an ETF. I like, I certainly like using SSO and those type of ETFs. And when I'm really bullish, I'll take the triple leverage ones, but I try to keep it. And I use SPY often. I use SPY in my retirement account. That's good.
That's probably my biggest trade is SPYs.
SPYs, yeah.
Yeah, the options on the SPYs.
Yeah, yep. So I use those as well. Those are. I don't trade the futures. I don't trade the future options because they're just too expensive. I like cheapy bets on the options because I like to keep the cost down. But I on this move higher, once we broke the hourly trend change that I was talking about on the stream on SPY, I got long at about 60. I'm in below this gap. So I'm in at about 60. I think it's like my average, like 65, 656 or 657. All right, let's go, Bulls. Come on, maintain it. Are you going to maintain it? Are you going to maintain it, or are you going to pull it back? What is it going to be? Late jump for me this morning. Guys, give me a quick second here. I'm going to take a really fast refill my coffee break.
No, you go do that.
Yep,
So
I'll be. Give me 2 minutes. I'll leave you here with time, guys.
Yeah, no, Rev's buying at 65. The E-mini just kind of stalled. Look at the bond yields on the bonds. Change this to daily. Bonds aren't doing much as usual, as expected. Just this is the yield of 443.88. Really not much movement today, but just really hasn't been much movement, period. This is a daily chart of the 10-year yield. I understand these are the blue arrow down is cutting interest rates 50 and the whites are 25. So we've, what's that, 151, 175 basis points, and yield on the 10-year is pretty much higher than when it started. So bonds haven't done anything. No tantrums there. No indication what's going on where. The VIX again gapped up, but it hasn't moved since. Yeah, there's just, again, daily chart, just tech's doing, screaming. We're sideways, getting up towards the top of the discretionary financials. Financials haven't done anything. I would expect I would have expected them to try to. Again, this is an ETF of the financials, so they're kind of languishing in here. Energy stocks haven't moved like crude has. Interpret that as, is demand going forward going to be there? Industrials are kind of hanging in there. They're at their highs. Healthcare hasn't moved. They've gone down. The staples, this has been kind of interesting. We've got out of this basic sideways balance, we had this price up there and that were rejected. We came back into balance, but we're just kind of skating along. So it's, we could have another break above this. So it's kind of building a little tight base in here. But with the market going the way it's going, staples have been not involved in this whatsoever. In fact, a lot of the staples are just really just getting hit. Again, with materials have done fairly well. They're at the top of their range. Communications, really nothing. Utilities, kind of running towards the lower end. And the last one, and real estate's actually done fairly well. They've kind of rallied. They're at their swing highs, top of balance, not their all-time highs, but real estate has actually done off the lows, have done relatively good. And again, here's the big chart, the SMH. And this is just crazy move.
Yeah,
it's just I don't know if anybody's out there. Anybody call this? Did you hear like back in March? Anybody saying there's going to be a huge rally? I mean, the closest one, to be perfectly frank, and I watch a lot of these. The one that's close was Handelstat.
Yeah, I mean, he definitely called it. I was asleep at the wheel. I wasn't even. Admittedly, I hadn't even looked at it. I was not paying attention. But that was.
He needs to make a curtain call. He's been about as right as this as any analyst on the street. Especially, Intel's his game or his stock. That's the one he's been watching.
Yep. And look at it. I mean, what was it that Hammer posted? He posted a chart of, I think it was SNDK. I think it's a monster move there. All right, guys, I'm still short here, looking for lower prices. It feels so wrong being short up here. Yeah, I'm cringing. I'm just waiting for that cup of Joe to brew to kind of keep myself distracted while
it's just dancing around your entry.
Yeah, it's torturing me slowly.
Yeah,
it's doing its thing here. So we'll see. At the end of the day, it's just a bunch of ones and zeros on the screen.
Talked to an old friend of mine that, God, we kind of started at Lehman Brothers at the same time in '87. And we decided that, we read a back of an article. We had like 6 months experience. So we barely could spell, stocks. And we read an article in this thing called Futures Magazine. Some guy said, "Oh, he's got this great system." So we, threw, I think it was like $500 at this system, and it's like, "Oh my God, this is going to be great. We're going to make all this money." And I remember, so we didn't know anything about futures. We were just, buy this, sell this. And our compliance officer came up to us one day and said, "Where are you going to want all this wheat?" What do you mean? He goes, "I got an order that you guys were long wheat and someone wants to deliver it."
Oh, no.
So I didn't know they did that. I was just playing prices.
All right, sounds like my coffee's ready. BRB.
All right. Yeah, just kind of stuck up there, not giving us much indication one way or another. Even breaking this down to 5 minute, we're kind of sitting 429 to 436. So we got a really tight range in here. And it's not giving us any indication which way it wants to go one way or another. Indecision. Waiting for some more information, maybe out of Washington. But again, we got the CPI tomorrow. Oh, Cisco's earning on Wednesday too, so that may have not that much, not like it used to years ago.
Yeah, looks like I'm about to take a shiner on this one. Yep.
Oh,
Oh well. RTY new high. Thanks, Stuart. Oh boy.
yeah, that really
It just took me out. It invalidated the move. It got me out. Pain's over. It's over. Yay. Oh, shit. All right. Nobody likes a happy loser either, Manny. So just grin and bear it.
cost of doing business.
Yep. Sure is.
Well, there's always that satisfaction of being disciplined.
Well, at least I got the 32-point gain, so I'm pretty happy about that.
Yeah, I mean,
it just is.
Make 32 points, use a couple.
Yeah, this move is pretty frothy here, though. It's got some legs in it.
Yeah, the Russell kind of take a.
Yeah, it's off to the races.
Yeah, broke above my area that I'm. So we could 29. What was the high? 29.02, and the Russell. That may be the well. Yeah, that's breaking up too. The E-mini's breaking. What's the NASDAQ? NASDAQ's slightly behind.
Turbo fan says, I either win or I lose. I either win or I learn. I never lose. Yep,
That's right.
Yep, that's a good way of looking at it. I like that. That's pretty cool. Large Void points out, if the bombs are flying, you must be buying. Referring to an old Wall Street adage. This one saying is the only thing that kept my mind open to a run on the February 27th. I had not seen market react that way, so I just observed. Yep, I wrote about it on March 30th. We're trading 6,400. I made the argument for 7,450. We're closing in on that target now. We're about 10. I can't believe we're 10 points away, dude. That's insane. I drew this target out. You can see it here. It's 74. Actual target is 74.93. It was a range, 74.50 to 7,500. I wrote about it when we were trading down here, 6,400.
Mm-hmm.
And I mean, wow, what a move. I bet you if I was more well known, I'd probably be like on socials and stuff. I'd probably be doing a big victory lap right now.
Well, would you have been better off if you would have bought it and walked away?
Well, I did. I got in. I was talking about it here on the stream. Mm-hmm. Remember, I don't know if you guys were listening to the ones who were. We were looking on this chart. We were looking for an hourly trend change right around here, and once we got that on the 4 hour, I got into I think it's 656 on SPY, and I've just been holding that. I think I trimmed off 25% of it as we approached all-time highs, and then the rest of it, I'm just letting it work. The idea for the entry is I have the entry scaled at 7,450. And 7,500 on ES. So whatever the equivalent was on that day for fair value, when I placed the order, there is an exit order for another 25. I think it's 7,445, and then 750. And then I'm holding, and then that will leave me long 25.
So you're still long for that?
Oh yeah. Oh yeah.
Oh, nice.
Oh, yeah.
I didn't know.
Yeah. Swing in the retirement.
Nice.
Yep. So it's really useful for for the retirement account, right? So just those larger when we get so that is going to be, I'm going to have an execution in that maybe 3 or 4 times a year. So now once I clear this one out, once I exit this position, which is coming very soon, I should probably get filled today. Then at that point, I'm going to check it once I go off stream, and then I'll leave the last 25%. I'll take that off, and then I'll reset. And then I'm looking to reassess, but hopefully, just thinking out loud here, maybe, see if we get some weakness at the end of May into beginning of June, and then I'll buy that for the summer run, and then try to get out of that by mid-August, and then look for another buy sometime maybe late October, something like that.
The way you're going from coaching to owning a Major League Baseball team a few more days.
Yeah, right. It is
You're owner of the Tampa Bay Rays.
It is. So it's not super leveraged position. So just, I'm participating in the move. That's about it.
That's right. Take them.
Take what I can get. All right, let's look back here. Not much to say here, guys. Obviously, I missed this move higher. And then that Diallo got me on that short trade, which didn't work out. There was a bad cover at the 32 points. I should have held that as a hedge against the algo trade, but I didn't know it at the time. That's the way the cookie crumbles sometimes.
Well, the market, it's not up huge, right? It's up 24 basis points. But the VIX is still up 6%.
Yep. That's very interesting. That has my attention. I thought that, so when I was warning to be careful when we were looking above yesterday's high, that's what I was really dialed in on, was that VIX. I was like, God, this VIX move. But then it took out that opening range low and moved lower. So it's like, all right, well, now it's not. It's hovering back above. It's holding the gap. So I think that we'll probably take a look later, but we're probably seeing just some insurance being placed, some insurance bets being placed against the back end of May. We'll see. All right, let's look and see here. This thing is not so typical. I would love it if the algo had me long in an account, but it doesn't. And, I don't, look, I took that stop there. I'm not looking to be super active. Like, it's just, I had that great overnight trade. I think I was talking to Stuart about overnight moves on Friday and how they can be really, really lucrative if you catch them right. So typically when I'm in something overnight like that, I'm coming into the RTH session with not much on my mind. I'm not looking to be that aggressive. I'm not looking to be that active. Maybe participate in some micros or something just to keep myself stay abreast of the situation, stay dialed into the market. But mostly I'm just looking for, just to chart, research, do that kind of stuff. Gosh, I can't believe we're closing in on that target, guys. 74.50 was the target laid out. Gosh, it was last year at the April dip. On the April decline was when that target finally came out. It was back here. Wait, let's see. No, so this was it was back here when I finally got to project it, to have this projection out. So it was down here. We were trading like 4,800 and mapping out 7,500 it seemed like an insane move. I thought, Jesus Christ, can it really complete wave 5? And nonetheless, and I thought it was in doubt when we were trading here for sure. I even wrote about it. I thought we were going to see some weakness.
So you're talking about the Elliott wave?
Yes.
Okay.
Yep. So you can see the wave count here. Let me just blow it out, put on a weekly. All right, so let me get this off. So this is
Elliott wave. Hey, just out of curiosity, is Robert Prechter still kind of the king of Elliott wave? Because years ago that he was synonymous with it.
Yeah, so Prechter is who was my first introduction to it, and then I've just picked up stuff from guys along the way. To have a strong network, guys, it's important. I've learned something about Elliott Wave from a lot of really good, and Elliott Wave is kind of overlooked nowadays, but I think for higher time frame structure, it's the tool for me.
That
And
goes.
so
These
you
things
can
go
see this.
fast.
Yeah, it started off of the COVID low. This move 2174. We're now approaching the
Oh, really?
the
Oh, so you're going back that far?
Yep. On this one, the move started on that 2174 low. So this move is taking 6 years to develop. So
Nice move.
yeah, insane. So the interestingly enough is that, again, going out on a limb here, but this 5 of 5 up here, if we do, when we do complete the target, and I think we might overshoot a little bit, and then they're never precise, right? Remember, tops form, bottoms happen. So I'm expecting some type of a top to be formed, but it also lines up with like a higher time frame super cycle high on SPX. So yeah, I don't really want to get too dry and granular about that, but I if everything lines up right, this is a huge inflection point for the markets.
So what happens after it hits that?
According to this, it's like a massive pullback. Yeah. So I think that 2020. I think the back half of 2026 can get pretty volatile, according to this. And I think that we could even be in for a bear. Dare I say it? Bear market, maybe. I don't know. I think that, so if you think about it, right, if inflation really starts to hit, if these oil prices really start to hit, but that's going really far out. I'm just looking at the back half of 2026 and thinking that, yeah, we could see some volatility, or maybe not reach the highs made during this spring move. Maybe get some weakness and then we retest these highs. I don't know. Starting to see somewhat of a pullback here, but just micro pullback. Yeah, because I'm again, so day trading is what I do, but I really like the higher time frame analysis and framing it out. But sometimes you can lose those. You can have an idea on the higher time frame and be completely trading against it. And be completely trading against it in the day time frame.
Oh yeah, absolutely. But you know what? It's for anybody starting out with day trading. Look past it. Look at the higher time frames. You know those references hold, and you don't want to go up against a longer time period resistance area. So you got to be aware of them, if nothing else.
Yeah, I think it's important so direction is what 90. I think direction is 90% of what we do, and it's remember, the market is going to try to confuse everyone, because not in order for people to make money, not everyone can be right. Mm-hmm. And so most people get it wrong. They're typically looking for, I don't know why, but typically looking for markets to go down. They typically go up. I don't know, it's a head scratcher. But with that being said, you use the higher time frame, you kind of stay in alignment with that, and then with a slight bias because of the evidence shows that markets move higher. And if you use that and try to frame your day time frame trades around it, it just keeps you more on the right side of things. But because the markets by their nature confuse and kind of twist things around, it's really easy to get confused and get direction wrong.
What is the saying? The market's going to do what it can hurt the most amount of people.
That's what they say. Yeah. And I guess it's because not everyone can be right. Not in order for the markets for people to make money, right? Stop moved up. Reverend Manny, big time. This is exactly how I trade crude. Tricky to get used to psychologically, but it's very profitable. Yep, agreed.
I've been right and lost money many times. Many times.
Oh yeah.
Get it right in my analysis and lose money in a trade.
That's why I stopped trading options. Oh God, I was so I'd be right, and then I was wrong on time.
Yeah. Although when the meme stop started, I think it was GameStop. I bought some options. I didn't know anything about it. It was just like on CNBC. And this is the first time I had heard of these, and I go, this can't work. These kids are not going to make it. And I bought some puts. I think it was on GameStop, and I kind of went and did something. I came back a few hours later, and I looked and I go, oh man! All of a sudden the stock it blew up like another 4 points, which was a huge percentage. And I go, oh man, well, I bit the dust on these options. But there was so much volatility, I actually made money.
Really?
They pumped up so much volatility into the premiums, I actually made money. They paid me back for the $100.
And so that's a large part of what my work revolves around is on technical analysis and also finding out, because the markets go where the money is, right? That's why everyone's scratching their head about this move higher and the global situation, and the Strait is closed. But that's because the Strait is closed, but where's the options liquidity?
Yeah.
And that's where the market's going. So right now, there's a ton of puts on the SPX above 7,500. I don't think we breach it. I don't think that in order for those call holders to be paid, they probably have to trade up to like 77, 7,800. I don't think the market's going to do that. I think it's going to go up there. It's going to tease. It's going to burn premium or stall, and then or maybe trade against it. I don't know, but I just know that it's the strangest thing. But whatever everyone's looking at, they're probably going to be wrong, because that's just the nature of the market. It's just the nature of what it does.
Yeah, it's breaking down.
Yep.
Pretty quickly.
Again, to move here. All right, we're back below yesterday's high, guys. Stay alert here. Stay alert. We're back below yesterday's high, testing value area high and overnight high.
Crude spiked up. It's an L.
Oh, the NASDAQ is completely shitting the bed. Excuse me. Completely taking a nosedive here. So stay alert. Stay alert.
Anybody got any headlines?
Let's see. Let me check the feed here. Hang on a second.
Yeah, you get Spygate doing anything?
Checking now. Hang tight. Okay. Okay. Spygate, nothing coming across. Oh, wait, I don't have it open. God dang it. Okay, hang tight. Oh, man. That stinks. Okay, Spygate had 5 big sell programs down there, so we'll listen now. There it is. Check the feed. Trump has told Fox News that he's considering renewing Project Freedom. That's not it. Spokesperson said, nope, I don't see anything. It looks like just a pullback.
Oh, Manny calling the top. That may be.
Yeah, right.
First pullback, take trade.
Okay, nope, I don't want to do that. I want to sit here tight. That thing came right down to the test of the open, nearly tested the open, and bounced like 5 or 6 points. So maybe we digest, we go sideways. I don't want to sell this though here. No way.
Yeah, not unless it breaks down way below that, but no.
Let's I mean, because this is the first test into yesterday's range, right? So let's see if the Nasdaq bounced off this lows, and yeah, the Russell did retrace a little bit, but this could be a trap. So let's just see how this plays out. Let the structure build.
From Friday. So yeah, it kind of bounced off of that. They're defending that price level. Again, it's when you kind of look at the value areas, obviously most of the time has been spent up here. Came back, touched, and went back up. You kind of buy the dip today, unless something changes. But
right,
the way the auction is setting up, yeah, it's.
Yeah, I agree with you. I think if we're using the higher time frame to kind of give us our bias, we have to keep buying dips, right? Nothing changes on the higher time frame until we get below those levels I outlined earlier, which is 73.90, and then of course the one down there below at 73.35 or 36. So anything else is just a pullback.
Yep.
Look for dip buyers to show up as they just did.
Yeah, they just whatever that was, they just erased it all.
Yep.
The crude back.
Not surprised.
Well,
not surprised. If you're following the clock, you're not surprised.
Yeah.
The high we put in, let's see, it doesn't look like that's, I don't know, not too much can be read into that, but a gun to my head, I would have to say the high of the day is not in. If there was a gun to my head.
Yeah, no, I think that's the easy path right now. Not putting the gun to your head, but
I like to, one of the things I like to do is always, frame things out in terms of is that the high of the week? I'm always trying to sniff out the high of the week or the high of the day, the low of the day, the low of the week. Those are the ones I try to nail. I try to be aware of them.
Well, history shows those are relevant information, right?
Right.
And that's what we're trying to do is find out what's going to be what's the market telling us is going to be relevant.
Correct. And right here, if you're following the higher time frame, I mean, think about how much money it took to get up here, guys. To rally this market. So definitely, I don't want to bet against. I don't want to bet against those guys.
I'd like to see it test the top of today's value.
And what level is that, Tom?
Roughly 74.37.
74.37. Okay.
So really no headlines saying what caused that little.
Nothing that I can tell from here. I checked Live Squawk. There's nothing going on in there. Check the feed, nothing. So, yeah, aside from that sell program which was, there are some sell programs going off here, but sells are more dominant today. Tom, where you said you're located in Houston, right?
Yeah.
Oh, how's the weather there?
Actually, we had storms going through a little bit last night, but it's hot.
Okay. Yeah, a buddy of mine played baseball there. Went to University of Houston.
Oh, really?
Yeah.
They usually have a pretty good baseball program.
Yeah, they do. Yep.
In fact, we got a place in Florida on the West Coast. We usually go back and forth. I spend more time in Florida.
That's common. I've seen that. I've seen that before. I know a lot of people who are who oscillate between Texas and Florida for sure.
Yeah, we many times spend the summer. I'm not this year, but spend the summer in Sarasota. That's what we have a place on.
Oh, okay, cool. Yeah, yeah. We're not too far away from Sarasota. I would say about an hour and a half.
Okay.
Without any traffic. So yeah, we're pretty close.
But yeah, we spend the summer on the beach.
Yeah, just north of you there is Bradenton.
Yep.
And we play a lot of tournaments in Bradenton. So Bradenton is there are a lot of minor leaguers there, like the Pirates are there, the Blue Jays, a couple of other teams. I think the Phillies are there, and so they have really nice fields, really nice youth programs. So we tend to go down there and look for competition.
Where's the Yankees spring? Isn't it in?
It's here in Tampa. Yep.
Yeah. Okay.
It's about 10 minutes away from me. That was one of the things that influenced my decision to move here. Reverie points out let's see, Trump to Fox. I'm considering renewing Project Freedom with expanded scope. Is he giving himself permission to go in again, but bigger? Sounds like it.
SCOB. Yep. Just go to Sarah's to see us the key. You know what SCOB is.
Oh, GDL, you're in Tampa? Oh, nice to know, man. Nice to know. We'll have to get together sometime. I'm also in Tampa. Yeah, I'm located I'm in South Tampa.
My father-in-law owned a place in
North Tampa.
They still are, but the White Sox had their spring training in Sarasota.
So I think I remember reading somewhere that there are about 14 major league teams that have their spring training camps right here in this, Tampa, Clearwater, Sarasota area.
Yeah. Well, the White Sox had it. My father-in-law rented out his house to Frank Thomas.
Oh, really?
And
cool.
That was the year actually Michael Jordan was practicing with them. So they stayed in my father-in-law's house.
Oh, really? Interesting. Hang tight. I just gotta come on in my door.
Well, one sector that looks to be selling off.
Oh, GDL said I'm on the other side, North Tampa, the Boonies. Yep, I know. I know North Tampa really well.
The Big Hurt.
You ever come down to Tampa, GDL? Look me up. Hit me up on the side. I'll give you my number.
Yeah, you know what? Discretionaries are kind of getting hit today. I mean, Amazon down, well, slightly. Best Buy. Oh man, I was short Chipotle for a long time. Oh, Target got hit. Well, like I said, the discretionaries aren't doing too well today out of all the sectors.
Yeah. Should we do a quick sector run through?
Yeah. Well, I kind of put a spread of discretionary and versus staples. Just kind of give you. Let me put it. And you put the market on this, if you kind of watch the bar chart up here, I don't know if anybody can see my chart. The bar chart, this does a good job getting pulling highs. You can see here where the bar chart is the spread between the discretionary and the staples. Once this went down, it's a ratio. This breaks down way before the market. The blue line is the S&P. So this kind of gives you a little bit of a head up. Over here also, this breaks down. This broke down way before the S&P did, and that was this year. So this year, you could see money getting pulled out of discretionary and going into staples before the market sold off. But I said this is a good opportunity. This is a kind of a nice little way to look at to see how where funds are flowing. And once you see stuff like that, it kind of gives you. But there's such a big spread between the S&P right now, and that is just crazy.
I think so. The one thing that I'm focused on for weakness is I'm going to look at the stocks, right? And because I don't think the market's going to pull back until we see some weakness in the semiconductor, and semiconductor index is the beacon right there, right? So I'm watching that closely. I have alerts on it, just because I don't monitor it as much. But until this breaks down, I don't see anything. I don't see the market, or at least, I mean, look, it never participated in the weakness that we saw when we were trading 6,400. It held a prior high on March 26th. So it was the strongest it maintained the strength. So
go ahead. I'm sorry.
No, I'm sorry.
No, the SMH, same thing as the stocks, right? It just indicates I can just trade it because it's got volume with it. But you take a look at this. It's up over the last 29 days, 29 trading. It's up like 60%. But there's only been 21, 2, 3, 4, 5 down days in 29, in the last 29.
Jeez. That's a frothy move.
It's a crazy move.
God. Yeah. That was this year's move. That was it. I'd expect this trend line to have some support eventually. I charted this out once, but let's just see where we are with this move.
Well, how does it look with Elliott Wave?
Yeah, that's what I'm going to start kind of getting my bearings on this chart here. Yeah, I'm gonna look at this one tonight because I'm gonna have to go back to make sure see where we are in this count. But this 1, 2, 3, 4, 5. We go 1, 2, 3. If we're using the COVID low as our anchor, which I have been on the indexes, this would be our 1, 2, 3, 4, parabolic 5. Yeah. Let me just look something up on that because I know I have notes in here. Let me just see. Price stalling out here a bit. Let me just I'm almost So, okay. So if I'm just doing this by eye, I'm going to call this 1, calling this 2. Here's my 3. I'm not, again, I don't have any of the Fibonacci. I have to draw out the Fibonacci's to make sure that it, the Fibonacci's to make sure it makes sense mathematically, but that would be 1, 2, 3, 4, 5 of what though? I have to look at it more granularly, but I'm going to look at this later on for sure.
Yeah, that'd be interesting to see where that may lead. Well, they're staying positive.
And so more importantly, let's just go back and look at ES, right? Because so wave 4 can typically be 1618 of the end of wave 5 can typically be 1618 of wave 4. So sorry, I already have that drawn out. Let me just get this here and point it out. 1618. Okay. Yeah. So the 1618 of a parabolic move on ES brings you up to 9,000. I don't even want to look up that high.
This is on the socks?
No. That would be on ES. Let's check a look at
Okay.
I'll look at FMH. Of wave 4, right? Okay. Why does it keep doing that to me? The tool that I have here. I mean, that would put.
With the highs.
Let's make sure. Right. So the 1618 would put it. Oh man, that was at 493. So it already blew that out. Let's go up to one more. Let's go up to 2618. Let's see. The 2.6 would put it up at 693. But that's not a good analysis. Let me work through the waves counts. I'll have it ready for us next Monday, for sure.
But we're
I'm just eyeing this. I don't know that it's makes sense. I'd have to go back and do a deeper dive on these pullbacks. Right. Let me just see. When was this thing start? Oh yeah, that's right. That's why I switched to socks, because SMH is kind of newer. Hang on. So if we're using that COVID low, which is what I used right here. Yeah. So it came back, it pulled back. It had a trend line touch. Yeah, that's good. I mean, yeah, this is, let's just put the 2618 on it. The 2.6. That would have it going to the socks going up to 13,451.
So how much?
Huh?
So how high?
13,451 on the socks.
Yeah,
that's yeah, that's up there. I don't think so. Look at the chart too, right? Are we going to get there from here? I doubt it.
Another 1,000?
Another 1,000 is what it says.
Yeah. Okay. It's 1,000. That was.
But it's in no obligation to move there from here, because the strength in the move has just been nuts.
Well, 1,000 points ago was last week.
Jeez. So you know what? Maybe that is on tap. Who knows? Gosh, this is so frothy. Look, right when everyone gets bullish, though, right? There's going to be a rug pull. I'm seeing signs. Look, I'm going out on a limb with the market blueprint and what I'm writing for Mr. Top Step at the opening print. But I've already started asking, sell in May and go away, because not because I think it, but because of something I'm seeing. And I made a decent argument about that in today's article. I mean, at least I just shared what I'm seeing, right? I'm starting to see signs, and you can see it in the writing, similar to what we saw down there at 6,400.
Was it in Mr. Top Step? I think I read an article about recently the sell in May and go away hasn't worked that much.
No, it hasn't. But
I think we said I think it referenced the last 10 years, maybe 15 years.
Yeah, so it's been really good over. It's been more about June. So if you go back and you look at it, June has really been the first week of June has been weak, but I'm just using that as a attention grabber. I don't think I don't believe in any of those cliches. I mean, sometimes I do. All cliches are rooted in some kind of truth, right? But no, there's weakness in the underlying book. I'm seeing that. I made the argument in the article that we're not seeing participation. I'm not seeing the buying that I saw at the lows. So, I mean, and on the rip up, you can see it every day what they were doing. Like, it was evident. You can see it, on multiple different measurements, right? You could see it in the options book. You can see it in the options chain. You can see the volatility coming through in Vega, and you can see it in the dark pool index. And that's not what we're seeing right now. So I don't know. We'll see. Again, I always ask myself, how long does it take to unwind a position that's this massive? I mean, to get ES from 63.53 up to 74.50, it takes a lot of money, and then it takes a lot of positioning. And how do you unwind that? How do you start to take profit without exposing yourself to lower prices?
And it's that psychological part, the conflicting part of it. Look how far we've come. Do we, it is, we don't want to get every penny in a rally. We ideally get the kind of 80% move, miss the top and bottom 10%, but this is getting crazy, but they're still buying it.
Yeah.
They're still buying it. That's conflicting information. That was a tough part for me when I started to get my traction as a trader, because I found myself not taking a lot of trades because you always see something that's conflicting.
Oh, for sure. There's always, and that's when you have to, and I don't know how you, how do you handle that, Tom? When you have conflicting signals, when things aren't lining up, how do you see that? And maybe you can share with the folks how you move forward from that.
Okay. First of all, the first thing is it's going to depend on what the conflicting information is. Is it something short term? Or is it a very long-term indicator? But I'll do most of the time, like probably 90+% of the time, if I'm going to buy X amount of shares or X amount of options, I go in. I don't scale in or scale out generally. I'll scale out sometimes, but it's when I go in, I go in at 100%. But sometimes I'll just scale back my position instead of buying, let's say 100 contracts, I'll just buy 50.
Got it.
Again, depending on the severity of the conflict, but you kind of, after years, start honing in on what you look at and what you don't. And once you start getting that down of this is important to me, that's what I look at is, and again, you kind of tell an amateur trader from an experienced trader. An amateur trader, there's a zillion lines all over the place.
Too much stuff, right?
Yeah, and the simpler the more experienced a trader, the simpler his charts look. I don't. You guys can see my charts. There's nothing on. I put profile on it, and that's basically it. And that's about it. And it works for me. And that's you just start throwing the bad information out. The more you get
Right.
experience.
Yeah, I always keep two moving. I have to have the volume profile on the chart, and I always keep two moving averages and only because I can't I just have to have them on there. I don't know that I trade off of them. And then these oscillators that I have at the bottom are literally just because the chart is too big. I barely use them. I hardly look at them. I might look at RSI on a higher time frame just as a quick reference, but they don't influence my entry or exit. When I'm entering or when I'm putting on a position, all I'm looking at is the delta, the flow, the order flow. That's what's influencing my decision. Whether to get in, whether to hit the trigger or not. Just basically trying to use that stuff. Reverie points out, Tom, key moment. What works for you? Everyone is different. And if it works, don't argue with success. I had a hard time with that until I realized trading my way gave me a way to make a hell of a living at it. Yep, there you go. There you go.
Rev, but it's a tough, and to respond to you, Rev, it was for me personally, that was a tough lesson for me to learn. And I think it was Denise Schuler that I read, and I hope I didn't reference it before I'm being redundant, but she said something like she was a psychologist. She came from the psychology background. I don't know exactly what. She became a floor trader, and then she went back to psychology, and she dealt primarily with traders. And one of the questions was asked to her is, well, what's the difference between a good trader and a great trader? And she says, great traders trust themselves. They use intuition, and that took a long time. I needed validation. You'll have that as you start to learn. You kind of get that intuition of, I think prices are going to go higher. And for me, it was always, well, let me check this, let me check this, let me check this. And I started losing a lot of, just noticing a lot of the moves that I had intuition worked. I kind of look at my, the profile and stuff like that. But I was always looking for a different indicator, something else to validate. And it's just never there. And it has to do with, and again, Rev, and it's just to respond to you, you got to start trusting yourself, narrow down what's good for you, what's not good for you. But the great traders, it has to be organic. It has to come from you. Through moving averages out there. For me, just the concept, the average trading, what's the average price over the last 50 days? Why is that relevant? Or what's the average price over the last 2? Why is that relevant? But you know what? A lot of traders use them. They trade off of that. And you know what? If it works, it works. It doesn't work for me that much. So there's my 2 cents is especially for newer traders, is find what fits good for you, your trading style, your risk parameters, and make a trading system that's organic. You may take little pieces from here and there. Thank God Pete Stottlemyre in this was just a fit, and I got lucky. But find the things that work and feel good for you. And
great advice.
It's got to be organic.
Yeah, I think that the market can be traded from any lens, right? Just what you feel most comfortable with, and it can take some time to narrow that down, but it's worth it.
Mm-hmm. No, there's so much, and it's when I learned, we didn't have the amount of information that you guys have now.
Yeah,
and you know what? It's not necessarily a good thing. There was no chart. To go way back is on Monday mornings we would have 2 books, and I forgot the name of them. And it was a blue book for the New York Stock Exchange charts and a green book for the NASDAQ charts. We didn't have charting software back then. I mean, it's going way back, but it's, there's so much information. And I'm sure if a new trader, they're going to be bouncing all over the place. And it's tough.
Yeah. There's just a lot of stuff out there, and also, there's a lot of stuff, especially, on YouTube and stuff like that. And a lot of it, I always recommend everyone find a mentor, because one of the biggest pieces to this is your obviously your emotions and how that plays in. And yeah, you can pick up a lot of good things on from YouTube and from books and stuff like that, but you can't. It's very hard to hone in on what is ailing you specifically, and for that, you need to get up and close and personal to it.
Yeah. I look back at, I didn't know it then. But, it's one of those life lessons. I didn't realize what I was looking for back then. But now that I'm here, it just never felt good, one line crossing another type of thing for me. It just, for some reason it didn't. But I tried them all. Every single indicator, I was in full bore, and nothing really fit. Until, again, looking back for me is, I think what I always was looking at is being able to interpret the markets, the auction market. And that's what's important to me, is if I can understand what they're doing or what they're trying to do, I'll be as successful at any time period and in any market. And once I kind of realized that, that's when everything kind of went parabolic in my trading.
Right. So market profile really spoke to you.
Yeah, that was when I learned. I'm Pete Stottlemyre, who for if people don't know, Pete Stottlemyre did this in the mid '80s. He developed this, and he had a class. He was teaching like in the evenings at the CME, I believe. Danny would know, but he had a class out. They had a family compound in California up in the Sierra Mountains. And we had a week up there. Got there on a Sunday through Saturday, I believe. And it was great. We sat there, we traded, and we're in cabins, and he had in a trading room. So, it was very intense for a week on what profile does, what he learned, what it represents. And that's what really sang to me. It's an understanding of what the market's doing. It's not an indicator. It's just rearranging data to show you what the natural distributions of the market are.
Yeah, I love market profile. I've read all the books. I've read Stottlemyre, Dalton. I've read them all. I took a Dalton class.
Yeah.
And it was a big piece of it for me, right? Because I've trained in almost all the disciplines, right? So traditional technical analysis like Edwards and McGee and stuff like that, and then I did Elliott Wave, and then market profile really kind of put it together where I was able to make sense of what was going on the chart without just, because moving averages are great, right? That's kind of where we all start, but they can be kind of opaque in that they can be kind of ambiguous sometimes. But market profile and then really fine tuning it with the volume profile really drove it home for me. The value areas, it makes sense. And there's a reason so when I started streaming at the beginning, I was going through what I look at and preparing the market blueprint and my trade plan. And I thought I need a way to analyze the market for the viewers and for the folks watching, the way that makes sense, that's general, but that's applicable to all time frames, and that people will understand. And I thought, I'm using market profile every day, and let me just stick to that instead of using Elliott Wave and some other things and new flows too much and Fibonacci's. Let me just stick to the market profile, because it's something that's really visual and really can be understood in a short amount of time and works. It works. That's the most important part. So that's why I look at the market. We look at it every day through the value areas, and look at it through that lens.
Wait a minute, just as per market profile, have you guys noticed the level of stacked?
Yep.
No.
Yeah. So yeah.
Control. What he's saying, the VPOP is the volume point of control.
Correct.
And yeah, they just, and I think you're referring to them going higher. I'm give me a little GD. I'll give me a little more explanation.
Yes.
But yeah, they just climb.
I think that what he's talking about is that we have, so in market profile, typically what you're going to see is you get what I discussed in the morning about the volume point of control. That's the price that had the most volume traded at it for the prior session. Okay, and for any session. And typically what you see is that level gets touched a very high percentage of the time in the following session or two. Right. And so when you leave volume points of control without being touched, it's almost like, look at it like gaps, right? The market will eventually go back and retest those prices or refill those gaps.
Yep.
So that's one way of looking at it.
No, it's and again, this has been a fairly parabolic move. This has been one of more, and I've been doing this since 1987. This has got to be close to one of the top 5, easily top 10 moves I've ever seen in the market. Yeah,
it's just an amazingly strong move. I wish that I remember the last year's rip off of the April rip. I traded that pretty well, just getting long every day. And then 2024, there was another dip that I traded really well. This one, I really wasn't. I was focused on that large distribution that went, that came over this large. Kind of rounded top that we made had me. I wasn't a believer really until we breached 6,800, and I thought what happened there, and when we gapped down that night on that Sunday night, and then rallied the next day, rallied like something like 140 points off of the gap down Sunday low. I was like, all right, this is insane. This is going straight to new all-time highs. So I didn't trade it as well as I'd like to think, but. Yeah, I mean, I did get the SPY position on, so that's great. Not the size that I wanted, and then that's what often happens is in 2024 I had a 450 point futures trade on ES, and what happened was it was an easy trade, but it ran away from me so quickly that I could never add to it. So that was very disappointing. Yeah.
Yeah, it's, there is no one way. There really isn't one way to make money in this market. It's whatever feels good to you, whatever's working for you, find your edge and stay with it. You could, tweak it here and there, but find your edge and whatever it is, there's, how would Warren Buffett be if he was a day trader? He may have been a terrible day trader. But, he found his edge. That's what fit for him. And he's done good.
All right. Yep. Good point.
Yeah, that's creeping up. But it's, if we start getting, again, start watching, if it pulls back into Friday or today's, we got this like little low volume. I don't put a lot of credit into it. But if we get down below the 74.37 level, that's where the higher volume is. So that's going to act as some sort of a magnet.
These are some of my favorites. So Pete Stottlemyre's.
He's got 2.
Yeah, trading at the market profile. That's a really good one. And then Dalton's Mind Over Markets. I like those. And then this one is another favorite, Encyclopedia of Chart Patterns. I've got this one dog-eared so much. It's this one's so beat up. But I love chart patterns. They're patterns for a reason. They repeat. I used to, but I've read them all. I've read Prechter, D-Mark. Here's Elliott Waves.
Yep, got that.
Wave Principle and DeMark, and I didn't get too much out of DeMark. I never knew how to use it well, but Elliott Wave and markets. If there was one book that I have to recommend, it would be Markets and Profile.
Yep.
Dalton's book.
Yeah, Jim. I think did he put out a new book?
Did he?
I thought I saw an advertisement for it. I'm not sure. But Jim does a very nice, he was there from the beginning.
Oh, for sure.
He, and as a matter of fact, if I'm not mistaken, he helped finance Stottlemyre.
Yep. He gave him 10 grand. The story, the legend was gave him 10 grand on the spot.
Mm-hmm. So he's been there from the beginning, and someone asked me, should I go to his class? I said, absolutely. Become a better trader. You will see. Now we're pulling back.
Simon asked, what about Trading in the Zone by Mark Douglas? Oh man, sorry, but so Simon checking in on YouTube. Yeah, absolutely. Trading in the Zone. So if there's one book that I've read the most, it's Trading in the Zone. Mm-hmm. Like I've read that book so many times, over and over. It just keeps on giving. It's evergreen. It always resonates really well with me. I have it here too. I have it on here somewhere. If I don't have it, it's because I was reading it somewhere. It's got to be there somewhere. Anyhow, yeah, especially chapter 12. I love chapter 12. But there have been tons of books. There have been tons of times that I've gone back and gotten different things from that book, especially on like just the general approach to trading, right? The mindset. I want to say it's the most holistic trading book, right? Covers pretty much like the mindset and how to engage the market, right? From a mental standpoint, because we all know about the mental roller coaster we can be on with this stuff. That was a really good one. Really good one. That's a classic. Man, I must have read Markets and Mind Over Markets no less than cover to cover, no less than 7 or 8 times.
I just finished. I almost said book, but it's like, I think like 15 or 20 pages. If anybody wants any basic information about profile, go to my website. In fact, I'll type it in here. Go. I've got a free book, and it just illustrates. I think it's like 15, maybe 20 pages, just a little bit about market profile and some of the formations. And again, it's very basic. It's free. Just go to the website, sign up for it, and just let me know. And again, this is for neophytes, just to get us a little basic idea of how to get there.
Cool. Good to know. Thanks for sharing that, Tom. How many of you guys out there are using market profile or are familiar with the terminology? Okay, good. Yeah, you see, I thought, yep, a lot of people know. That's why I started framing the morning analysis based upon that and just sticking to that, because a lot of people understand it. It makes sense. It works.
One of the beginners, in fact, I think DB is CQG was one of the only platforms you could get market profile on.
Yep.
For a long time. And I have been on and off CQG several times. In fact, the girls, Danny and, oh, geez, I'm sorry. I apologize.
I cannot trade without a profile chart.
No, I can't. But I know they use CQG.
Okay, yeah, they're the original.
Yeah, Lauren, exactly. Thanks,
yeah,
Rev.
Lauren,
I'm sorry. Lauren, I apologize. No reflection of you. I'm just a knucklehead. But with Lori and Dan, they use that. But CQG, I was talking to some of the people about 6-8 months ago, and they said, things as we were referring to kind of go in and out of style. And he says market profile is going to be becoming much more popular on their platform. We're
Really?
getting much more usage out of that now.
Yeah, it makes sense. I mean, if you don't know it, guys, I suggest there's tons of information out there. Tom just shared the link to his site. Start there, and if you need to know more on it, shoot me an email, shoot me a message, send me a DM, and I will get you some resources on that. It's just it'll really have you looking at the market differently.
Yeah,
it will make a lot of sense.
If it does, I mean, I'm pretty much versed on most of the platforms out there. Window Trader is the best as far as, I don't use it because I don't day trade that much with it. It's the most granular, the most robust. In fact, that's what Dalton uses, Window Trader. Resident Chat uses it. So it's very popular with, if you're just using that, I would definitely recommend looking at Window Trader.
Yeah, in case in point, so one of the guys I'm coaching now, he's a neophyte, right? One of them is not, but the other one is, and I told him he had to read. I gave him my old. I went to Dalton seminar and I got a DVD copy of it. So I gave him those to watch, and then I asked him to read the book. I also told him that he needed to read Trading in the Zone by Mark Douglas, and those are the only two books I told you have to kind of read these. And so he got them on Audible, on audio platform, which is kind of cool. And he's working his way through those now. I think he's almost done, but it'll have you looking at value so much different. It'll let you know, it gives you a really good framework and structure for how to view the market correctly.
What, God, who was it? Give me a second. Who just put out a book? Oh, Brett Steenberger.
Oh, okay. Yep.
He's he's from the psychology part of it. He just put out a positive trading psychology, turning personal strengths into trading strengths. And Brett does a good job. I like. I've read his other book. I just started this one. That's kind of the same thing. I know Mark Douglas is from the psychology or the emotional standpoint, the psychology standpoint. I don't think the highs are in.
Nope, not at all. I can't believe we're going to hit that 74.50. That's been the target for just. Again, I know I'm harping on it, but I don't have much else. It's an amazing move. Just an amazing move. I thought maybe by the year end. Never, by May. Remember, I voted on March 30th. So I mean, you're talking about 1,000-point move.
Yeah, that's
in a month.
Yeah, that's CNBC.
Yep.
Oh, it's almost 10:30.
Yeah,
I got 10:30
the opening.
Yeah, that's the thing. If you take a look at the profile on the, I guess what they're saying, the C of the third half hour, when we sold off, once it got back into, and that's one of the things is when you got to get a profile that's pretty established, it trades below it. Once it gets back into it, the point of control, which is probably what, 74.36. Once it kind of got back into the value area, and for those who don't, value area is, statistics 101 is 68%. I forget what second standard deviation, 95 something, and then 99%. But anyway, 68% of the market prices. Once it got back into there, it acts as a magnet, and it just kind of rallied back up to the high. And again, they're trying to go after the highs of today. But all right, 10:25. Gentlemen, ladies, thank you very much. I appreciate it. I hope I brought some value, but I have to step out.
Oh no, thanks, Tom. I really appreciate you stopping in and sharing your input. Always fun to have you.
So we're done. We're done with. Thank you, GDL. So baseball's over. No playoffs.
No. So yeah. So we still have. So my daughter's league won her championship. So we have another game. We have a game tonight, and then we have just a few playoff games. But so there's one tonight, and then I think there's one later this week. But these are just the playoffs. So the kids get all excited for it. I'm just looking forward for it to be done. My daughter's super excited. And then we got some All-Stars games coming up, but the regular season's over. Thank God. Ready for a break. Yeah, I'm ready for a break. It's going to get really hot soon. So, yeah, I'll be up for GDL. I'll be up in New Tampa, playing at New Commerce Park. It's in your neck of the woods.
Yeah. Again, guys, thank you very much. I hope I brought some value. If there's anything, anybody has any questions, you could reach out to me, either through my website, and I think you could direct message off of this. So anybody has any questions?
You sure can.
All right, guys, listen, have a wonderful day. Make a lot of money.
Thanks, Tom. Appreciate your support.
Right, thanks, buddy.
Well, you guys are just stuck with me now for another few minutes. Just trying to nail some of these, trying to fix some of these risk parameters on this algo. All right, guys, that's going to call it for me. I hope I brought some value to your trading. I'm going to grab a bite to eat, and then I will be lurking. I have a meeting, and then maybe I'll jump on later on this afternoon. Remember, stick with the upward grind is real. This is not a market. I don't think that we want to try to be fading this. If you got anything out of this at all, do me a favor, hit the like, send a comment, or send me a DM if you're in the pit chat. Appreciate you guys' support. Thanks for keeping me company this morning. I hope I helped you out. Hope it made you some money. Take care, guys.